We are watching Datavault AI Inc., trading under the ticker DVLT. The Datavault AI trades as DVLT, and the price action you are seeing corresponds to DVLT. At this exact moment, the stock is changing hands at 1.87 USD, trading down by 0.16 points, which translates to a sharp intraday decline of 7.77%. If you were just glancing at your watch list on the Robinhood app or checking the movers on your Fidelity mobile app, a 7.77% drop on a stock trading under $2 looks like a classic run-for-the-hills moment. The expectation here is incredibly simple and arguably lazy. The market sees a micro-cap company with AI in its name, assumes it is just another hype cycle beneficiary deflating as the air comes out of the speculative balloon, and decides to sell. The prevailing narrative suggests that this is a company burning cash, pivoting wildly from audio technology to data monetization, and that today's drop is the market waking up to a lack of substance. Investors expect that a stock trading at this level is purely a gambling vehicle, destined to drift lower as the initial excitement fades. But the reality is far more complex, and frankly, far more interesting than a simple pump-and-dump schematic. What you are witnessing today at the 1.87 level is not necessarily a liquidation, but a violent repricing of risk associated with one of the most aggressive business pivots we have seen in the small-cap space. The reality is that Datavault AI is attempting to merge three distinct and volatile sectors: artificial intelligence, real-world asset RWA tokenization, and data valuation, into a single publicly traded vehicle. Today's drop comes on the heels of massive news regarding their $150 million financing deal with Scilex and their expansion into mining asset digitization. The market is struggling to digest the dilution risk versus the massive revenue guidance hike they just dropped, projecting $200 million in 2026. You are not looking at a dying company. You are looking at a company undergoing a chaotic, high-speed metamorphosis. The tension isn't about whether they will go bankrupt tomorrow. It's about whether they can actually execute on a roadmap that sounds like science fiction to traditional value investors. Let's look at the intraday mechanics. The stock opened higher but faced immediate selling pressure at the 1.95 resistance level. This suggests that there are trapped longs from the $2.50 plus range who are using any liquidity to exit their positions. However, as we approach the 1.85 mark, we are seeing the bid-ask spread tighten. On Interactive Brokers trading platforms, the order book shows a cluster of buy orders sitting right at $1.82. This indicates that while retail traders might be panic selling on the headline drop, deeper-pocketed speculative funds are stepping in to accumulate shares, betting on the support holding. The volume is heavy, significantly above the 10-day average, which confirms that this is a battleground stock today. It is not drifting down on apathy. It is being pushed down on active distribution and met with active absorption. To understand why this stock is so polarizing, you have to look at what they are actually selling. The expectation is that they are just a software company. The reality is that Datavault AI is positioning themselves as a data bank. They are using their proprietary Sumerian technology to take physical assets, like the minerals in the $7 million deal with MTB Mining, and create a digital twin that can be valued, tracked, and monetized on a blockchain. This is the concept of real-world assets, or RWA, which is a massive theme in the crypto space but rare in the traditional equity market. When you buy Apple stock, you are buying hardware and services cash flow. When you buy Datavault AI, you are buying a call option on the idea that in the future, everything from copper mines in Tanzania to commercial real estate will be tokenized and traded like stocks. The market doesn't know how to value this yet. Is it a tech company? Is it a commodity play? Is it a crypto proxy? That confusion creates the volatility you are seeing right now. This brings us to the recent partnership with Scilex Holding. This deal is fascinating and bizarre in equal measure. Datavault closed a tranche of financing that involved receiving Bitcoin. Yes, Bitcoin. For a traditional analyst at Fidelity Wealth Management, seeing a company take payment or financing in cryptocurrency adds a layer of forex risk that is hard to model. However, for the modern investor who uses SoFi Investing or Robinhood Crypto, this signals alignment with the future of finance. The market's reaction today, the 7.77% drop, likely reflects anxiety over the structure of these deals and the potential for shareholder dilution as warrants are exercised. The expectation is that dilution kills equity value. The reality Datavault is pitching is that this capital is necessary to build the infrastructure that will generate that $200 million in revenue next year. If they hit that number, the current market cap is a fraction of what it should be. If they miss, the dilution will indeed be painful. Let's talk about the retail versus institutional dynamic here. If you browse the discussion boards on investing sites or social media, you see a frenzy of retail optimism focused on the meme coin dividend. Datavault has proposed distributing a meme coin related to the Dream Bowl 2026 to shareholders. This is a highly unorthodox move. Corporate finance theory, the kind you would learn studying Schwab Intelligent Portfolios allocation strategies, does not usually include meme coin dividends as a way to return value to shareholders. It screams publicity stunt to the skeptics, but in the current attention economy, attention is currency. By doing this, Datavault is ensuring a level of retail engagement and loyalty that boring B2B software companies would kill for. They are weaponizing the retail trader's enthusiasm. The drop today might partially be a sell the news event after the initial hype of that announcement faded, forcing the stock to find a floor based on actual fundamentals rather than just novelty. Speaking of fundamentals, we must address the Q3 earnings. They reported $2.9 million in revenue, which was a massive jump year over year, driven largely by their new live events business. This is where the company grounds itself in reality. While the RWA tokenization is the blue sky future, the live events and data monetization business is the bread and butter today. They are helping venues and organizations monetize their audience data. This is a crowded space, but Datavault's angle is that they allow the data creators, the people attending the events, to share in the value. This Web3 ethos is compelling, but it is expensive to build. The net loss of $33 million is the number that bears are fixating on. You cannot burn $33 million a quarter forever when your stock is at $1.87. This cash burn is the ticking clock. It forces them to raise capital, which dilutes you, which drops the price. It's a vicious cycle that they are trying to break with explosive revenue growth. Compare this to a mature tech giant like NVIDIA stock. NVIDIA spends billions on R&D, but they have the cash flow to support it. Datavault is trying to build a Ferrari while flying a plane. They are attempting to scale a massive data infrastructure platform while simultaneously managing a micro-cap balance sheet. This is why the stock trades with such volatility. It is not for the faint of heart or for the capital preservation portion of your Fidelity IRAs. This is a venture capital bet that happens to be liquid and publicly traded. Now let's consider the sector headwinds. The broader AI trade has bifurcated. Investors are no longer blindly buying anything with AI in the ticker. They are becoming selective, looking for earnings and free cash flow. This shift hurts speculative names like Datavault. Furthermore, the crypto trade is also volatile. Because Datavault is straddling these two worlds, it gets hit by headwinds from both. If Bitcoin drops, Datavault might drop. If the Nasdaq drops, Datavault drops. However, the inverse is also true. A resurgence in crypto sentiment or a breakthrough in AI regulation could act as a dual thruster for this stock. I want you to pause and think about your own portfolio for a second. Comment below how many shares of Datavault AI you currently hold or if you are planning to buy the dip today. Also, let me know what you think about the meme coin dividend. Is it genius marketing or a red flag? Moving deeper into the analysis, we need to look at the Sumerian technology IP. This is their patent-protected stack for data valuation. In a world where AI models are scraping data for free, the future legal battleground is going to be about data sovereignty. Who owns the data used to train the model? Datavault's technology is designed to track and value that data provenance. If the courts decide that AI companies must pay for data, which seems increasingly likely, Datavault is sitting on a goldmine of IP that facilitates those payments. This is the hidden asset that isn't on the balance sheet. The market is pricing them as a service provider, but they might actually be an infrastructure